What is going on, investors? Hopefully you guys had a great Thursday out there. Time to talk about Peloton Interactive. Ticker symbol PTON. The company just came out with their fourth quarter earnings, and they also gave guidance into the first quarter as well. And this stock is trading off today in the after hours. During the regular session, down to 1.86%. In the after hours, it's bouncing around. It was down as much as 12, 13%. Now it's down about 6% to about $107 per share. My normal trading software is not working for some reason, so we're going to use TradingView. Earlier in the day, this stock was up here at $114 per share, kind of continuing a little bit of a melt up. This stock was down at about $80 back in May, and boy, it's come back nicely. It was up at 115, but now we're down here at 107. We'll talk about what this means from a technical perspective. Is our uptrend broken? Was it already broken? Where we can anticipate Peloton shares trading in terms of a technical view. Now, the most recent quarter came in. They did some things in the after hours. They knocked the price on the Peloton bike down. I think that's about $400. It is now $1,495 or $39 per month. Tell you what, if you bought one a couple days ago, you're probably going to be asking for a refund. Now, in terms of the fourth quarter, that came in, but unfortunately it came in under consensus, okay? Because they were expecting over 1 million paid subscribers, but the company only reported 874,000. We're also going to take a look at the upcoming quarter where they're expecting $800 million worth of revenue. So we just reported Q4. We'll go into the numbers here in a second and we'll talk about them. We'll look at their graphs as well because some interesting stuff happened here. But we'll come into the numbers and we'll see that they just did a quarter where we had $936 million worth of revenue. And the upcoming quarter, they're actually projecting $800 million worth of revenue, and Wall Street was expecting $1 billion. So you'd expect quarter over quarter growth from 936 up to $1 billion. That's what Wall Street was saying. And Peloton's saying, nope, we're going to come in at $800 million. That's a problem. And that's part of the reason why the stock is trading down in the after hours. Now, the other thing that I'm seeing here is we've got quarterly total revenue. Take a look. We were on a steady ascent up for over the last few years with barely a blip, and the revenue actually increased over $1 billion the last two quarters, and then now we've slipped to 936, and the next quarter they're projecting actually underneath that. So, oh my, slowing revenue growth, that's a problem. We also have connected fitness and quarterly workouts. Those are trending down as well, although that's a little bit less important. I don't care if somebody buys a Peloton bike and doesn't use it. That doesn't really matter a whole lot to me, although it does show the strength of the program. We're also seeing average number of workouts per sub is also going down. Again, some of this has to do people going back to work, people, getting out of their house and doing other things. You can see your workouts decline in those cases. Now, let's jump over to the numbers. They kick things off with a balance sheet over at Peloton. It's about as good as you can possibly get, okay? They do have a lot more inventory. That's what I noticed over the last year or so. So they were building up inventory, and maybe there'll be demand for this in the coming quarters, but as we see, revenue is actually projected to not only decline quarter over quarter, but is declining again in the upcoming quarter, and it's really not a lot of growth year over year on that. They are stacking up inventory. You see, they had $244 million worth of revenue. Now they're close to $1 billion worth of inventory. I think I said revenue. I meant inventories. Inventory is stacking up over at Peloton. They've got plenty of cash. They've got some marketable securities. They got about $1.5 billion worth of cash. That's a little bit less than what they had in the previous quarter. They made a major acquisition to bolster up their manufacturing, and that could be why this inventory number kind of ballooned a little bit, is now that they actually have some of this inventory might not be finished goods. Some of it has to do with they acquired a company to help them manufacture the bikes and the treadmills and all the other things that they're doing over at Peloton. Now, in terms of liabilities, not a lot to see here. So it's still crystal clean from that sense. They raised some money from a convertible note as well. That helps shore up the balance sheet, help close that acquisition, those types of things. Now, in terms of our revenues, and our profits over at Peloton. We got our revenue here. We've got our connected fitness product. This is the bikes, the treadmills, if they're not recalled and those types of things. That went from 485 just up to 655. A little concerning because the connected fitness product is the gateway to your subscription. You got to pay, I think it's $30 or $40 a month. And forgive me for not knowing this. I actually own a Peloton treadmill. But I think it's like $40 a month or something for the subscription to the app and have that device connected to all your workouts and those types of things. Well, that went from 121 up nicely to 281. And the reason why I pay so much attention to the subscription is that is the bulk of where the profits are going to come. Not only now, but I believe in the future as well. They just dropped the price of the bike, so I would expect these margins to compress on the connected fitness product. Take a look. They spent $580 million to make this $655 million on that connected fitness products. So it's not a very high margin business, okay? 580 to make 65, not super high margin. Where you're getting the big margin is in the subscription. Take a look. They spent only, and I say only, $103 million to make this 281. So if you are bullish on Peloton, you got to have them sell these connected fitness products, the bikes, the treadmills, all those types of things. And then that is because the subscription margins are absolutely juicy. So we've got our total cost of revenue. We take this $936 in revenue, we minus off $683 million worth of cost, and we get to a gross profit of $253 million. Now, unfortunately, our revenues grew year over year on a quarterly basis from 607 up to this 936. But unfortunately, our gross profit slipped into the tank. We went from 288 down. So revenues went up, but our gross profit actually went down to $253 million. I can see why this stock is trading off in the after hours. Now, unfortunately, we've got other costs over at Peloton. We went from $84 million worth of sales and marketing cost up to $230 million. And we got general administrative went from 86 all the way up to 232. And we've got research and development went from 28 all the way up to 93. Our total operating expenses ballooned. They went from 191 all the way up to $555 million. So you take your total revenue of 936, you minus off your cost of revenue at 683, you get this $253 million in gross profit. Well, unfortunately, now you got to minus off your operating expenses of $555 million. You guessed it, that gets you a negative $301 million loss from operations. Unfortunately, this time last year, they were sitting at a $90 million profit. I remember doing videos or at least looking at Peloton and thinking, man, this company has turned the corner, and they turned the corner fast. They are on a great trajectory, and certainly the stock had rewarded it for it as well. The stock was up over $160, almost $170 per share, because I think investors were seeing the same thing. A high margin subscription business, popular connected fitness products, but all that obviously has come tumbling down over the last year. They started with the problems with the Peloton treadmill, and on and on and on. You also have lots of competitors into this space. Not only that, I think the reopening of things obviously has gotten people maybe back to their home gym, but certainly maybe back to work and a more active lifestyle than they were when they were just sitting at home. Maybe the need for a Peloton and a Peloton subscription has just slipped out of reach for many people. All things being considered, quarter over quarter, it's not looking good from a revenue perspective. Quarter over quarter, not looking good. Also, the guidance coming in at next quarter is coming in at $800 million. Look, last quarter in Q1, they did $757 million. So they're almost looking like flat growth year over year. So we're declining revenues quarter over quarter, and now we're slipping to flat revenue growth year over year as well over at Peloton. That's not good. On top of that, the margins in the connected fitness products are slipping and being compressed tremendously. And that is an absolute problem because that is screwing up our gross profit, and it is leading us to a massive $300 million loss in the most recent quarter. I can't imagine that next quarter will be a heck of a lot better. Now, Peloton's going to spin it to you. They're going to say, hey, let's look at some adjusted numbers where we factor in, $194 million worth of stock-based compensation. So this company was profitable from an operating perspective, not profitable from a net income perspective. They lost $71 million this time last year, but $88 million worth of stock-based compensation for the entire year. This year, you guessed it, it basically doubled and even more so up to $194 million. We were cash flow positive at Peloton last year at $376 million. Now we're cash flow negative. This company is starting to pedal backwards, and it is not a good thing. All things being considered, everything else on cash flows looking about what you'd expect, again, with a company that is seeing declining revenues and flattening of their margins and those types of things. Well, take a look. The stock was at 114. From a technical perspective, it's down at 107. It has hit an area of support. I would say exactly where the stock is right now, it's a natural resting point. Now, if we break this 107, which looking at those numbers wouldn't surprise me. Sure as heck, it wouldn't surprise me if we come down here to about $100 per share. $100 per share has acted as support many times, or a couple times here for Peloton. I tell you what, you break 100 and then all of a sudden the lows are back in play. Back at $80, $85 per share, somewhere down in this range certainly would be in play. But we were in an uptrend. We had a low here, higher lows, all across the way, and then we broke trend. Actually, really, over the last week or so, we broke this trend, and today we confirmed it as well. This uptrend is broken. Now, two things happen when I see uptrends break, okay? What often happens, I feel, is they sideways consolidate. That's one option. The other option is that we break these lows and then we start testing lower prices. Like I said, $185 is where I'm looking for with Peloton. Not looking good, in my opinion. This is a stock that I want to like. I like the product. It has helped me from a personal level, but you now have declining revenues, okay? Quarter over quarter, and now year over year, they're basically looking like they're going to come in flat. Not only that, we're seeing margins compress dramatically on the product side, okay? And so you're having your revenues decline and your margins decline at the same time. I think that's a problem over at Peloton. I can see why this stock is trading off in the after hours. We do have a $33 billion valuation. Now that is high, but it's not necessarily as crazy high as I've seen some other stocks. Look, for the full year, we just did $4 billion worth of revenue. I think this upcoming year is probably going to be less than that. So you're trading like, 8 times revenue on this one. So yeah, is it overvalued? Of course it is, okay? And for a while there, Peloton was making sense with its valuation, saying, hey, they're going to grow into this from a price to sales basis. And look, they were even profitable to a certain degree as well. But again, that has all gone out the window, and it looks like it's going to stay out the window for a little while with Peloton. Hopefully you guys have a great day out there. We'll be back tomorrow with our normal FANG Stock recap show. Until then, good luck with your investments.